Good morning, everybody, and welcome to this live webinar brought to you by CoinDesk on regulation, the path to ubiquity. I think the mood has really changed in the world of cryptocurrencies, and the sector is subject to increasing regulatory pressure, in particular in relation to compliance and to fraud. But as crypto exchanges and brokers look to expand rapidly and capitalize on this market growth, they must really realize that to achieve these growth aims, they need to balance their regulatory needs that are now being imposed. So we are joined today by three very distinguished panelists, coming to you live from Hong Kong, from Florida, and from London, so giving us a truly global perspective. I would now like to ask each of them to introduce themselves and describe what they and their firms do. So first, perhaps we can start with Joseph Weinberg.
Awesome, thanks Nick, and good to be here everyone. My name is Joseph Weinberg. I'm the co-founder of Shift Network. I've been in the digital asset ecosystem as kind of an early pioneer in the Bitcoin space. We've been building Shift for the last 5 years and kind of working across the regulatory environment and the policy environment, kind of making sure that we have infrastructure to support identity-based systems on the Shift side, as well as regulatory compliance, new infrastructure for the more permissionless side of the ecosystem. Yeah, good to be here.
Great, thank you very much. Dwight Van Diem, perhaps you could introduce yourself now.
Thanks, Nick. Yeah, hi everyone. My name is Dwight Van Diem. I'm managing partner at BCW Group. We're a boutique strategy consulting and tech development firm that specializes in designing, building, and taking to market DLT-based solutions. Our core focus is on payments and financial services, but we also work in other areas like sports and entertainment, gaming, etc. Our clients range from Fortune 500s to disruptive fintechs, all the way up the DLT stack, so layer ones, core infrastructure, service providers, etc. It's a pleasure to be here today and looking forward to the conversation.
Fantastic, thank you very much. And last but by no means least, Nabeel Ahmed.
Thanks, Nick. Thanks for having us, and thanks, Joe and Dwight, for the intro. It's great to be here. My name's Nabeel. I'm with a company called WorldPay, which I'm sure many of you have never heard of, but I'm almost certain all of you use on probably a daily basis. So for those of you that aren't familiar with WorldPay, we're actually the world's largest payment processor, and we work with companies all the way from small businesses up through multinational enterprises across the world to help them manage their card payments, alternative payments, payouts to customers, third parties, etc., and also provide a lot of services and technology to manage risk, fraud, compliance, etc., around payments. And so my role in particular is actually overseeing our crypto business. And so as it relates to this conversation, we work with a lot of the major exchanges, wallets, brokerages, etc., in the crypto space to manage their fiat on-ramps and off-ramps, as we like to call them. So definitely excited to be a part of the panel today and very keen to discuss the hot topic of regulation in this space.
Thank you, and thank all three of you. Yes, it is a hot topic, and the title of the talk is counterintuitive. We say it is regulation is the path to ubiquity, but why do you think this is? Why do you think regulation actually will provide the secret sauce, if you will, for the market to grow fully? Perhaps Dwight, you can start us off with that.
I guess I do a very high level bit, but I mean, in our view, is like in a nutshell, it's just defining the gray area and turning it from gray into a defined space. And by doing this, you enable trust in the system. And so it's important for both companies like WorldPay with Nabeel here that want to offer and play in this space and offer value to customers, but it's also important for the customers themselves to see that value and engage in that system and actually have a willingness to pay for the value that's being offered to them by these various different companies. And I very much believe that we're at that point right now, which will bring this next phase of adoption as you have all of these big companies that are seeing that the rules and regulations are more clearly defined. To take an anecdotal example, you could just look at the market in Singapore with the PSA license, and the fact that it uses various new components that we're obviously going to talk about here today around FATF travel rule and stuff like that. And once that was defined, something like 1,500 companies automatically applied for this. And so there's obviously a rush to these markets because companies want to offer a bunch of services to customers. They just want to do it when it's actually more clearly defined.
Right, so it's all about clarity. But Nabeel, how, from working as you do right in the heart of the global payment system, how do you see regulation equaling ubiquity? Nabeel? Have we? Joseph, perhaps you might jump in.
I think you're.
I think Nabeel's having some technical problems.
Yeah, I can jump in, I guess, in the interim. I mean, I think like the way that we kind of look at this is a few different core realities. And so when you think about like the path to ubiquity, we're trying to basically provide clarity. We're trying to also like really define what are the risks. When you think about it from the largest institutions in the world today, they're generally the aggregators of a lot of on-ramping around the world, right? So whether you're WorldPay and you're the largest kind of payment processor, you just have the network effects to expand and rapidly allow adoption. And so in order for institutions like that to enter into the space, we really need to make sure that we have some of the base frameworks on how they operate defined. And so we think that in order to get to the next phase, you need the largest aggregators in the space, in the world rather, to be able to accelerate that adoptive growth. And I think largely that's the reason why the regulatory conversation is so impactful today, is that we're starting to see the biggest institutions and really the largest kind of, I think, retail growth start to occur. That comes with saying we need more clarity, we need more ground rules, we need to understand where the rubber meets the road here in order to progress everyone forward into this ecosystem. So
what's very interesting about that is that the shift has come from consumers, but also from service providers and other companies that are operating within this space. And the mood has changed very dramatically in that these are the ones who are actually calling for regulation.
Yeah.
Why do you think that is?
I mean, I think that there's a few trends, right, and themes, right? I think that we're starting to see a lot of new market participation and new participants. And I think that the industry up until only the last couple of years really was a very particular user group. And I think that as those user groups are kind of horizontally expanding, we're starting to see the need for new types of products and new services. And everyone has a different, requirement. And I think that's largely what this represents. And I think that getting that right is really important. And so I think that that's largely just a function of new consumers, new demands. This market has to adapt towards an ever expanding and changing group of individuals. And so, and I also think that, the Wild Wild West was a function of not having other choice, to be honest, right? And so, as we mature, we also have to recognize that we can provide more choices, we can provide more opportunity, and I think that's largely why everyone's calling for it. I mean, my grandma doesn't want to have to worry about her money, getting hacked or stolen, and whether or not she's getting a fair trade. And so I think that these are the new demands that we have on the marketplace, and we have to adapt based on that.
Yeah, and hey, Nick, sorry about that. I think I'm back now. Just to add on to that, I think, if I look at it from my perspective and a lot of the banks and other financial services partners we work with, I think if you compare today to a few years ago, today you've got a lot more buy-in, I think, around the potential of the technology, the use cases. You've got people that are, what I would say, excited to be involved. But what you see today is actually the number of banks, the number of payments companies, the number of insurers and other kind of key players that are actually participating in the ecosystem isn't really all that much higher than it was a couple of years ago. And so I think today you've got the interest, but you've got people sitting on the sidelines because they're uncertain, they're scared, they want to participate. But the thing that's holding them back is, as Joe and Dwight have called out, is that regulatory and legal uncertainty. And so I think, from my perspective, as part of the kind of what I'll call legacy financial ecosystem, regulation's the key to unlocking institutional adoption and ubiquity. And if you want consumer adoption and ubiquity, you need to have the institutions that they interact with and deal with on a daily basis in the ecosystem as well. And so to me, if you get the institutions comfortable, which regulation is probably the number one factor or key to doing that, that kind of paves the way for consumer ubiquity and adoption as well.
Yeah, I mean, the question is, do the regulators actually want to provide that level of trust? They failed to do it in the traditional markets, and some might argue that actually they don't provide clarity on purpose because that can actually hold them back. So, is it wishful thinking to think that the regulators are actually going to provide the level of clarity and certainty and trust that is required for the crypto markets to become fully institutionalized?
Yeah, it's a great question. And I think it's less about clarity, but it's more about having a framework and some guardrails. I think part of the issue today is you don't know what you can and can't do. You don't know what the potential consequences or implications of certain things might be. I think if you have a guardrail and a set of framework that gives companies comfort in what some of the limits are, but provides freedom to innovate within that sandbox, I think that is kind of all you need. I personally don't think we need, very prescriptive regulation, especially since a lot of use cases and, things that companies want to do aren't even in the regulators' minds yet. But what I do think we do need is almost like a safe space, so to speak. We need something that gives companies the ability to get rid of a degree of fear and uncertainty that's holding them back today. And that, I do think, if you look at, certain regions around the world, like Singapore is an example that Dwight gave, they're leaning in on that. And they're not being very prescriptive, but they are giving institutions the higher degree of comfort that they do need to start operating in the space.
Yeah, absolutely. And do you think that there's a certain sense of competition? Because many of the regulators actually are also, let's say, the central banks, and the central banks are all looking at issuing their own digital currencies themselves. Are they being maybe reticent to offer regulatory certainty until they've actually achieved their own digitization and instituting their own cryptocurrencies? Dwight, perhaps from Asia, which is further ahead in CBDCs in many ways, you can give your views.
Yep. Yeah, I mean, it's definitely a big question. I think that is something that's probably actually being discussed and considered. And I think the massive amount of growth on the stablecoin side of things is actually probably the key focal point that really sort of brought that to its attention. Because at the end of the day, what a central bank's worried about with a stablecoin, especially if they get really, really big, and obviously we saw this with the concept of Facebook and Libra, obviously now Diem, but essentially a central bank loses a lot of the levers that they would normally have to control monetary policy. And then there are also various different components sitting in the collateralization, but behind some of these stable coins, it's no longer effectively like M0, M1 money supply, which is what you would expect for, I guess, the pure cash component. Potentially sometimes the collateral behind it is other assets. And so you potentially have a systemic problem coming off the back of these stablecoins. I think that growth has definitely spurred a lot of these central banks to start thinking about it. And then obviously everything that China's been doing with the digital yuan and how far along they've got with everything is obviously also causing a lot of countries to sort of really sort of pull this into focus. I don't know if it's too much of a problem for the traditional crypto side. I mean, I look at it a lot that basically, that regulation that the FATF has put in around this stuff has effectively proven legitimacy of the crypto side of the market. And the fact that, it can't be really considered to be funny, silly internet money anymore, because you've got FATF and you've got governments around the world that are effectively started to regulate these things in a framework similar to money. And so I think in the eyes of the world, crypto is growing up a little bit. So I think we should see these things in unison with each other.
Yeah, and maybe I'll add to that. Like, I think the big regulatory, question is, we, like, these systems do not work the same way as the traditional financial system, right? Like, this is this is changing the definition of intermediary. And that's really what, these systems are meant to do, is to eliminate, these counterparty requirements. And when you think about that from a regulator's perspective, the reliance is really on intermediaries in most definitions. And so I think this is going to, take center stage in things like decentralized finance, when they're trying to understand, how do we regulate in a traditional context when it doesn't really work and those rules don't really apply in the same way? And I think that, like, that's largely the complexities here. And I think the travel rule, at least to the centralized custodians, it does make more sense. But even in that case, there's still a lot of complexities that make that quite a drastic challenge, I think. So I don't necessarily think, I think there's an element of competition, as to your question, Nick. But I also just think it's about, like, we have to make sure we get this right. And these things are moving very fast, and regulators are trying to, battle education with rapid advancement. So,
well, it's interesting, in your neck of the woods in the United States, you have to decide if a crypto asset is either a security, in which case it'd be regulated by the SEC, or if it's a currency, in which case, or something else, then it would be regulated by the CFTC or the controller of the currency. So it actually, which bracket does this actually fall into? Which then, I suppose, the discussion should be: do they require a whole new regulatory agency, perhaps? Certainly, maybe in the US, where you do have a divided regulatory landscape. Or something that's more unified, as in Singapore, where the MAS will holistically look at everything at the same time under the same roof.
Yeah, I think it's a really good point, Nick. I think I personally think there is a bit of competition, because there's a lot of investment in the space and nobody wants to be left behind. There's definitely, I think, some degree of a first mover advantage when it comes to, some of the things around what Dwight and Joe mentioned around setting standards, participating in those discussions. And so I think there's a bit of interest, I think, from regulators in being amongst the first to do that and participate in those discussions. And I think you bring up a really good point around, how do you regulate? Is it the same body? Is it a different body? And I think the institutions and the governments that are going to be successful here in creating good ecosystems and driving innovation are going to be the ones that kind of recognize the nuances with crypto and with blockchain, and how it's different from the existing financial system in their countries. And I think those that lean in and can craft a framework and rules and regulations that appreciate that and acknowledge that and foster or encourage building on those differences are going to be the ones that are successful. And I think the countries that take a view of trying to fit existing regulation and standards and frameworks from today's financial system onto the crypto ecosystem are probably just gonna A, fall behind, and B, lose the war on talent and investment and innovation in the space, because as others pull ahead, that's where the companies and where the talent and where the dollars are gonna flow.
I see all the panelists nodding vigorously at that statement. That was a great message and very well made. I'd just like to take this opportunity to remind the audience, if you have any questions, you can enter them into the chat box or the question function, and we will get to them as and when they come through. Okay, so taking a step a little bit further away from the notion of sort of regulatory competence or even regulatory competition, let's think about consumers. And how are we actually going to get to, I suppose, ubiquity of use for consumers? What will need to really change? Is it all about vendors accepting crypto assets as payment? Is it something as basic as that? Or are there other kind of regulatory issues that could help foster that? Yeah, who would like to go? Joe, why don't you go?
Yeah, I'll kick it off. I mean, I think that there's a few things, right? I think that, like, user experience in some capacities need to improve. And I just think that there needs to be more, I think, trust across a lot of the service providers. That's like the biggest thing, right? It all comes down to trust.
Trust, right.
Yeah, and I think that that's like really, really critical. And I think we're actually starting to gain that. And I think you can tell just with the growth of platforms, exchanges, et cetera, like we're starting to see that, I think, start to really, be prevalent. I do think though that it's like the biggest growth when we talk about like real true ubiquity will come from the largest institutions in the world today. Like there's no question that, you know, if you can do highly integrated service offerings from financial institutions around the world, you know, that's where, you know, everyone holds, you know, financial services today. Getting someone to part with their bank account is actually quite difficult. And so if you can, you know, look at new ways of providing those services directly to where, you know, the consumer lives, I think that's ultimately how you look at, you know, really large accelerated adoption and scale. And of course, that comes down to how do you get, you know, the safeguards in place. So that's my perspective, at least on that.
Yeah, I look at it very much like it's coming from the driving from like the corporate side. I mean, like if you look at it, I feel like we're just moving through an innovation adoption curve, and so, you know, first, I think it's going to be these innovative companies that see this as the future. You know, it shouldn't be surprising that the firms that are embracing this technology at the moment are of that type of profile in the fintech space and the innovative space. I mean, all we have to do is look at the challenger bank space. You know, Revolut added the functionality a while back. N26 announced this week that they want to be offering it by the end of the year. You've got PayPal, who's a disruptor in payments, who saw the writing on the wall and made significant investments into the space to build out the infrastructure to support this type of stuff. You've got WorldPay from FAS with Nabeel, who's the biggest fintech in the world for a bunch of different critical pieces in the space. And, you know, they've been in crypto for over half a decade now. You know, we've been working with them to sort of break down those barriers to help people buy crypto with card through all the biggest exchanges in a partnership that we've put together with them. You know, and there's obviously many others, but like, I definitely see it that's like that start bit. And so there's a lot of companies, as Nabeel was saying before, that are like waiting on the sidelines. And they're all scrambling to be second into the space and see how they can fit this into their business model and see if it would work. I mean, I couldn't tell you the number of household names that we've had sort of discussions with from the payments and remittance companies that are basically coming to us and saying like, hey, how do I plug this type of stuff in to my business model? What do I need to do? And there's a massive knowledge learning gap from them, because a lot of them think it's like super easy to just plug in, but there's like a plethora of infrastructure and services and components that need to be plugged in to make that happen. And so they're kind of scrambling at the moment because they realize that they are a couple of steps behind. So I find that once these guys start to rush into the market, it's going to be great for the consumer, because we're going to see massive amounts of ease of access. We're going to see much better competitive pricing, and we're going to see some innovative products come out of the back of this. I mean, like, you can see some companies already offering things like bit pensions and stuff like that, which is an amazing concept to sort of see out of the back of these types of things.
Absolutely.
Sorry, you were going to say something.
I think his lag problem.
Yes.
Yeah. Well, on that front, you know, what strikes me as being very interesting is how many companies have already embraced crypto as a store of value, and they can't have failed to see that. But it is the means of exchange, which is the part that, as you say, is much trickier than they probably think. Perhaps you could tell us just a little bit more about that plethora of infrastructure that you just mentioned, that all these companies who are scrambling to be second, which is another great phrase. Perhaps you could give us some of the more technical details about what they really should be thinking about.
I mean, very high level, there's a bunch of stuff. I mean, obviously at the core is the custody of it. A lot of these firms are not set up to deal with handling private keys. What the best type of solution is, depending on the type of company that you are. Like if you're a payments company, you kind of want a custodial solution that's like high throughput, or a bunch of other components that need to be thought of. You know, one of the key things that we always talk to them about is well is obviously on the regulatory side of this. You want to make sure that you've got the right AML and KYC components in place, because you actually don't know where these digital assets are coming into your platform from, and so it's super important to have a lot of these like blockchain forensics tools to do this. Which also leads us into why we put together a partnership with Joseph and Shift, because this is like the next phase of a bunch of AML tools that are like super critical for a lot of these companies to actually start being able to accept and transmit payments in the digital space, knowing that there's some sort of risk-based rules or surety to the stuff that's passing through your company.
Yeah, absolutely. Joseph.
Yeah,
absolutely.
I just want to add one thing onto what Dwight said. I fully agree. I think, Joe hit it on the head around the institutional piece, and we've talked, at length about the regulatory piece as an enabler for that. But I think the other big piece is really the technology. And, I draw my inference from the traditional payments industry where I work today, where, every time you as a consumer send or receive a payment, there's probably somewhere between 3 and 10 different companies that are involved in that transaction that are providing some layer of security or compliance, or, as Dwight mentioned, AML or financial crime fighting, et cetera. And so I think the regulations, kind of the framework is the word I like to use, but actually complying with that and making consumers comfortable with that, that's where the technology piece comes in. And so I think, like Dwight said, around pieces around on-chain analytics, companies like Elliptic or Chainalysis have been, pioneers in the space. And I think what Joe's doing with Shift, as Dwight alludes to, is absolutely part of kind of that key technology or infrastructure layer that's going to, build on or enable the consumer adoption after the institutions make the leap following on the regulation, if that makes sense.
Yeah, Joe.
Yeah, no, and I think just to add to that, like, in the way that we looked at it is always, we have, incredible infrastructure that, decentralized public networks and cryptocurrencies are enabling. But the one thing that's missing is like this, where do businesses in this kind of human interaction layer, like how do we start to like solve, I think, the counterparty requirements, right? And I think this is largely like the largest question in risk today. And, when all these institutions are trying to evaluate adoption, they really are trying to understand risk. And if we don't have a framework for understanding risk, then how do we, progress forward? How do we know where to start, right? And I think that's the biggest, the biggest area that we're trying to kind of tackle. I also think that that's kind of, in effect, what, the FATF travel rules trying to solve for, trying to put in a framework to say, this is how we think that you need to understand risk. And these are the things that, of course, companies in this space, these are the things that you need to do to make sure that, you have a way of evaluating your own risk and also your incoming, partner's risk. And so if we can solve that and do that in ways that don't, jeopardize the decentralization, function of the space, the openness of the space, that's, I think, the biggest challenge today, but it's also the largest opportunity. Can you balance regulation? Can you balance those kind of objectives and do it on top of public networks, do that in a fairly permissionless environment, keep the fundamentals alive, but enable, this kind of adaptive growth cycle to occur. I think that's, that's been the focus that we've had. And I think that's ultimately where, the future lies as well. So.
Well, it's very interesting because this comes up against what some would say was the original design intention of the crypto markets, which is for them not to have intermediaries and for them to be fully anonymous. How can you keep that whilst allowing for identification?
Yeah, and so I think there's also this kind of big misconception, right? And I was a very early Bitcoiner, I guess you can call it. Before Bitcoin was cool, I like to say. And Bitcoin was never designed to be an anonymous system, right? Like it is inherently transparent, and like I think what people get wrong is that like these types of public networks are at the base layer like meant to enable privacy. And privacy, of course, is very important. Whether you're in a business function, in any capacity, we need to start with privacy. And from there, we start to then make trade-offs. And that's the way that, everything works. We trade off to use a new service. It's all about optionality, right? And so how do we enable more optionality and more choice is actually, I think, what a lot of like public networks, are today. I think there's a division of people, that probably think more anonymity over anything else, but this is really about how do you enable privacy and better services through more secure systems. And so I think that like when we have to look at this from a trade-offs perspective, I think there's actually ways, and we've been building this predominantly at Shift, is can we effectively solve the counterparty relationship requirements and do that at a layer that is extrapolated from the Bitcoin network or Ethereum or any of these digital public permissionless systems, and really connect them together. If you can connect them together, but do it in a way that doesn't violate those principles, you can solve the entire regulatory question. You can enable businesses and institutions and companies like WorldPay and of course their partners to solve this risk layer question, but do that without hindering the advantages you get on these types of public systems. So.
And Dwight, do you think that solution is the kind that your clients who are talking to you, who are looking for ways into this, is that the kind of thing they're looking for?
Yeah, I mean, absolutely. I think that Shift has gone about it, as Joseph said, in a way that's like very much aligned to the industry and the ethos that the industry grew up on. And so I think, it's definitely a better way of going about it than a fully centralized system. And so from our perspective, with some of our clients, we sort of work quite closely with Shift. We run some infrastructure underneath to help some of the big companies that are like looking to find these solutions, because, you, as Joseph said, you have like the layer one protocols, and then this is kind of like a piece bolted on top to help support it from a reg tech perspective. And then, you've got companies like WorldPay that come along and say like, hey, this is really innovative, and this is something that I could potentially use to help solve some of my problems. So they're stacking on top of that, and then they're packing up all of their merchants on top of them. And so it's a great sort of value stack of everything that's sort of needed in the space.
Yeah, I fully agree with Dwight. I think from our perspective on the fintech side, it absolutely checks the box and helps address some of the concerns that us and our clients and our partners have. But I also, if I put my consumer hat on, I think a solution like Shift is quite elegant, right? Because it removes the duplication of my data across a lot of centralized databases, as Dwight said, and as everybody knows, privacy, data sovereignty, et cetera, is top of mind for today's consumers in a lot of different regions. And I think a solution like Shift allows you to transact in the crypto ecosystem, allows exchanges, merchants, partners, banks, et cetera, to get comfort around that, but also for you as a consumer, increases data security.
Great. Well, let's look at one specific piece of regulation that is very much in the news at the moment, the FATF's or FATF's travel rule. What are the implementation challenges of that rule, and I suppose how challenging is it for the industry as a whole? Joe, perhaps you could start that.
Yeah, and so it is incredibly challenging, and so like just to kind of give I think a precursor to what the travel rule is. Effectively, it's inherited from systems like SWIFT. The purpose and intent of this kind of requirement is effectively to enable two different transacting parties, let's call it Exchange A and Exchange B, to be able to effectively share KYC and sender and receiver data across each of those counterparties in order to share, of course, KYC information on the transacting users prior to every transaction, or at least in line with every transaction. And so when you think about this in the traditional system, payment transactions through things like SWIFT, well, they do this very seamlessly because the identity information is the financial transaction, right? It is a requirement in order to direct, the $100 or $1,000 I'm sending for myself to someone else. When you think about this in the public network, crypto context, this is not impossible, but it is very, very complex. And why is that? Because traditional public network systems only rely on public and private addresses. So I don't need any type of identity inherently in those systems to make payments flow. And so I don't have to wait to say, what's the identity of this user? Is this going to the right place? As long as I have an address, I can, send that transaction. And I think that's what makes those systems like really, really incredible, is that it provides incredible efficiency. And so when you think about this problem set in the broad context, we're dealing with hundreds of countries. We also now have to think of every country as a different regulatory approach. The FATF is a standards body, but regulators take that guidance and kind of put it into regulation and try to make it something that everyone can kind of agree to. But then what we have to do is look at this across all of these open participants. There isn't 10, 20, 50, exchanges or VASPs, as they're called, in the world. There's tens of thousands. And as adoption occurs, there's hundreds of thousands. And so you're having to basically just determine three things. How do I determine who my counterparty is? How do I discover who they are? How do I determine the regulations in all of the jurisdictions in which those transactions are moving to and from? How do I determine the privacy requirements, the GDPR considerations? How do I make sure all of this is done, and all being done before every transaction moves? And there's a lot of transactions. And so to do this over such a wide surface is incredible from a coordination perspective. And so, you need a system that can dynamically coordinate that, but also not have to rely on any centralized trusted intermediary, because every business has to rely on themselves, and there has to be business sovereignty, and there has to be disclosure, and there has to be visibility. You need a system that can kind of coordinate the trust graph across all of those connections and interactions. So it's an incredibly complex process, and I think the industry has been trying to tackle this, in many different formats, and it's still a challenge today.
It's amazing. I mean, the irony is that the market as a whole has been calling out for more regulation, and now it's come, and we go, wow, this is difficult. So it's there is a certain level of irony there. We've got a couple of questions from the audience, which I'll jump into now, if that's okay. So the first one is, we've seen more rapid institutional/enterprise adoption in parts of the West, with much of APAC lagging behind for various reasons. How do you see the institutional and enterprise growth across APAC, Asia Pacific, unfolding over the next, say, 2 years? And I presume that's for Dwight.
Yeah, I mean, I can, it's definitely a challenge. And I think part of the reason is that like everything is just segregated here. Each country is different. They got different regulations, different rulings, all this type of stuff. And so it does make it difficult that if you're going to sort of roll out a sort of large scale APAC focused thing, you have to apply for regulation in 10, 15 different places, which is obviously different to the concept of having like a Euro bloc or the United States. And so that's obviously one thing that makes it a challenge. But one thing that really excites me about what's happening in Asia is the fact that like there's almost like a leapfrog in technology with a lot of stuff, less to an extent than you see in Africa, but the fact that like out here, digital wallets are higher than card usage. So like in a lot of these different countries, payment methods are being sort of moved one step ahead. And so when you sort of extend that out, a digital wallet is already natively ready to go for CBDCs and for crypto to be sort of plugged in alongside whatever other payment methods are sitting inside them. And the consumer or the user of these things is already well along the way to how these things work. I mean, your average person in the West is still paying for things with card. The concept of a QR code popping up and you scanning it and then authorizing a payment is less so in the West than it is out here. And so I think that you'll see a rapid acceleration of things out here based on that as a baseline.
So consumer-led, and then the institutional enterprise adoption will follow. Is that?
Yep.
Yeah, great. Okay. Second question from Anne-Marie, I believe. Where do you see the relationship of CBDCs and stable coins vis-a-vis crypto going forward? Regulators are scared and they can convince consumers that crypto is bad for their welfare. So this comes back to what we were discussing really about at the beginning about, the authorities producing their own crypto assets. Are they going to try and scare consumers away from the existing private sector generated crypto assets?
Yeah, I mean, I think that there will come a balance. Like, I think everyone's trying to figure out like where do the risks lie, and especially on the CBDC side as well. And I think it's really that they just need to create time in order to play catch up. And so I think that like there will be this, you know, intermingling between two. I very well think that there'll probably be more regulation on the kind of the private currency side, let's call it. And I think that that's okay, but I do think that they will coexist, right? And so USDC or USDT, these stablecoin issuers, I think will have like a room in the future, of course, to play across all of this. But I think that these things will coexist. I think regulators, again, need time to figure out how to build fast enough, build at the scale of a country, which of course is a very different, you know, mental framework and model question. And then they have to figure out how do these things kind of intermingle, I guess, if you will.
Yeah, I actually, just to add on to that, I view them as almost symbiotic, because I think if CBDCs, you know, come out in certain countries, it's going to almost force consumers in those countries to be to become more comfortable transacting with a digital form of currency. And a lot of that consumer awareness and education and adoption that's driven by CBDCs is probably going to, you know, lend itself to more people being willing to go transact with the private side of crypto. And so while I do agree, you know, there's a quote unquote degree of competition, I actually think that competition is good, and it's gonna drive the overall ecosystem to kind of a next level scale, and B, almost help like weed out the winners from the losers because of that.
I mean, it also just depends as well, like what type of CBDC is going to be issued. Like a lot of countries are looking at this and going, okay, let's just do a digital currency between the central bank and maybe down to the commercial bank, but you know, don't push it any further down. We just use it as a control mechanism in that space, which means that from a retail perspective, you actually don't have full digital money yet, and so you could end up, like Nabeel said, with like this symbiotic thing where you've got, you know, maybe it's the CBDC backing the stable coins of the world, and then it's the stable coins have already got the infrastructure out there who are doing that portion of it, because it really depends on how they're going to implement it.
I think another thing too is, you know, we talked a bit about earlier, you know, on the regulatory and government side, some of the slow movement or the caution, I think, is because of almost like a lack of education or lack of willingness to get into the details. And I think as CBDCs become a higher priority, it's going to force regulators and governments to get into the weeds, get into the details, better understand the technology. And I actually think that will inform the regulatory side of it, not only for CBDCs, but for private and other public cryptos as well, which again, as we talked about earlier, helps them set that framework, which helps drive institutional and consumer adoption of those non-CBDC assets.
Fantastic. Well, we've got about 3 minutes left, so I think we'll just circle back really to where we started and just ask, what does the future look like? You touched on it just briefly there, Nabeel, but perhaps Dwight, you can give us your vision of what the future looks like.
I mean, I think it looks pretty cool, hence why I love working in the space. I mean, I see it as like money and value transfers growing up. You know, it's finally becoming 24/7. It's becoming instant. It's becoming more direct in nature. And, you know, we're all busy building this plumbing and infrastructure underneath it so that customers can natively, not like via synthetic means, actually have that today, you know. And what I mean by that is we have sort of like wire transfer companies, for instance, that may offer me as a consumer instant transfer and settlement. But true to the fact lying underneath that is that it doesn't move instantly, you know, and businesses have built business models on top of it to facilitate my demand to want instant, but we don't actually have that in the infrastructure underneath, and it's still slow and clunky. And so that true digitization, you know, frees up a lot of things. And, you know, I think from the fact that this technology enables all that is what excites me and the rest of the team at BCW.
Great. Joe?
Yeah, I mean, I think that there's, you know, this all comes down to, how do we make sure that we have the most tightly integrated services? I think on one side, inherent privacy by design is really like, I think the biggest like question. And it's like, how do we enable frictionless systems to actually become frictionless? I think that's kind of to Dwight's point. And so I think the way that we see everything is, you have fully interoperative systems, things that are actually communicating real time, that are actually moving assets, moving value, securing data in new ways. And it's really about networks, right? Like, how do you enable network by design systems across everything, whether it's data, whether it's regulation, it's really about like networks of networks and making those things constantly available. And so I think that's plus regulation leads to, the future.
Well, that's fantastic. Thank you all very much indeed for those insights. We've covered a whole load of ground today, but there's some big picture and some very granular insights. So I want to thank you all very much indeed for your time, and thanks to the audience for watching and for your questions. And we'll see you at the next webinar. Goodbye.
All right. Thanks, Nick. Thanks, everyone.
Thanks, everybody. Thanks, Joe. Thanks, Nabeel.